welcome to today's more important chart analysis videos on Tuesday 3rd of April with me, Rich Perry, market analyst at Hantec Markets. We had the first day of the first trading day of the new quarter yesterday, and markets were down strongly on Wall Street. We had the S&P 500 really quite strongly down, but interesting that the dollar hasn't really moved a great deal. But let's show the S&P 500. Sharply lower again yesterday, breaking trend lines through the 200-day moving average. I've got the 144-day moving average on my charts, but through the 200-day moving average apparently as well. And it all continues to look corrective. The Dow has actually broken below its equivalent February low. But interesting that the dollar is not really moving too much, but this is all coming as Treasury yields continue to sort of drop away, although there's a mild rebound today on Treasury yields. As interestingly, there has been a slight unwinding of the some of the safe haven moves that we've seen recently, with the yen just weakening a touch, gold lower, and as you can see here, Treasury yields slightly higher. But this is all coming, this is an interesting chart. 48 basis points. That is the lowest spread on the 2s10s since 2007. And that just shows that the yield curve in the States continues to flatten, which is not especially positive, certainly not for the dollar. And flattening yield curve, what does that mean? Well, when the yield curve goes flat, if the yield curve becomes flat, that is a harbinger for a recession. So yeah, certainly the market continues to sort of interestingly push towards a flatter yield curve. But the dollar is not really making too many moves at the moment. Certainly moved sideways since the middle of last week, and that's generally because the euro has basically been flat. But it's interesting that we're starting to get a little bit more, bit of an uptick. You've seen sterling, which is performing fairly well today. The Aussie is also performing well. Aussie has had the RBA this morning, kept rates flat as expected at 1.5% of the RBA, but the sterling has gained ground on the fact that a little bit of ground on the better than expected manufacturing PMI data, 55.1. Now it's interesting also that we saw the Eurozone manufacturing PMI slipping back from, confirming that slip back from back to 56.6, which is actually an 8-month low on that PMI data there for the Eurozone. So interesting sort of slowing recovery, slowing momentum in that recovery of the manufacturing sector in the Eurozone. So we've got a fairly positive sort of move in terms of risk sentiment today, but will that continue? There is a dichotomy in the fact that certainly the European equity markets are lower, and not only that, you've got the DAX, which is underperforming again, so that tends to be coming on concerns of global growth, and that is certainly a factor with the fact that the fears over trade wars continue. China announcing their sort of raft of 128 US products, which they're going to impact with a trade tariff. So my chart of the day is Euro Aussie. Now, Euro Aussie has been interesting because it's been breaking higher, finding support at higher levels, breaking out, and it's broken out recently, or towards the end of March, and then found support last week around that 59.75 breakout level. And it continues to do so again today, hitting that level and bouncing. Now, this is a key level because obviously we find that old resistance becomes new support, and I think around that 59.75, that's a pretty decent buy level considering we've got the momentum indicators which are positively configured. And I think little corrections are a chance to buy. Now, I think whilst you remain trading above, 58.55 is the next support, but above this mid-range pivot, I think you'd still say that the momentum remains positive within this move higher. And I think this is any sort of corrective move is a chance to buy on the Euro Aussie. Now you've got these momentum indicators on the hourly chart, which is just unwound towards sort of a level at which the buyers have tended to resume control during the latest break higher. around 30 on the hourly RSI. Again, a level at which the buyers will come back in. So yeah, I think this could be an opportunity. So a breakout back above 60.85 would, which was yesterday's high, would sort of resume that sort of push higher. Now, obviously, the move initially has been as a reaction to the RBA, but I think once this move settles down, I think the euro will regain its sort of control as being the dominant force in this pair. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.